Hello and welcome to CNBC TV 18 Citizens Monetary Policy Committee. On the eve of every monetary policy, our Citizens Committee meets to shadow the RBI's MPC. They discuss what are the inflation growth dynamics and other trends facing the economy, and they vote on what the RBI's MPC ought to do. Let me welcome Chairman Pranab Sen and members Samiran Chakrabarti of Citi, Soumyakanti Ghosh of SBI, Sajid Chinoy of JP Morgan and Sonal Verma of Nomura. As always, we will first get their views and deliberate on growth and inflation and then request the committee to vote. Let me start with the lady first. Sonal, we just saw a weak GDP print for the fourth quarter. Yes, the MPC has to look at inflation, but there again, the last number is 2.99. So how should the committee think of rate action?
Actually, the numbers in the Jan-March quarter finally confirmed three things. One is that, yes, demonetization did have a significant impact on economic activity. Second, the growth numbers are actually now finally consistent with what we've been seeing on the real activity front in terms of the monthly indicators. And third, this is actually now consistent and makes it clear why core inflation momentum has suddenly softened so dramatically since demonetization, because post-November the continued downside surprise has also led to questions of whether the inflation downtrend, core inflation downtrend, is structural in nature. And what the GDP numbers now basically are telling us is that both growth and inflation are seeing the effects of demonetization. So it actually ties in very well together. Now, the question is, what lies ahead? And the indicators starting in March broadly have been suggesting an improvement and a recovery from the demonetization shock. Demonetization has continued. Rural demand, urban demand, certain services sectors are starting to revert back to the pre-demonetization level numbers. So I think therefore, this is ultimately a transitory shock, and despite the downside surprise, should not have much material impact on the policy outlook.
Okay. Well, Sajid, similar question to you. Would you agree with Sonal? How do you see the growth inflation dynamics?
I think two things came out quite clearly from the GDP data. The first was that even though the focus is very much on the impact of demonetization, the fact is growth began to slow in the quarters well before demonetization. So the first judgment the MPC has to make is how much of the slowdown in the second half was simply a continuation of a process that started before and therefore could be more enduring and more ominous, and how much of this was just transitory because of demonetization that's going to reverse. My own sense is that growth has been relatively weak for much of the last year, and the proof of the pudding is in the eating. The fact that core inflation, when measured correctly, has fallen another 100 basis points over 2016, I think adds more credence to the view that growth has been slowing more secularly, and therefore we should be a little bit cautious about expecting a very sharp recovery. The second point, I think, is we finally have a consistent macroeconomic narrative, which we may not like, but it's consistent, that, as Sonal said, the GDP data, the high-frequency data, pricing power, core inflation are all suggestive of a slowdown. Now, I think the most important part, however, is the MPC will be guided by where the inflation outlook, right? Growth only matters to the extent that it affects their inflation outlook. And what I was struck by in the last MPC minutes was this was a committee that was firmly focused on upside inflation risks, and those emanated from three sources. One was the output gap would close and core inflation, which had been very sticky in their view, what would remain that way. The second was everyone expected a sharp mean reversion of food prices. And the third was the HRA allowance as part of the pay commission. I think at least on the first two factors, there is progressively more comfort that inflation that those risks will not manifest, and therefore inflation could potentially meaningfully undershoot the RBI's forecast. A secular and sustained disinflation of food may have more of a structural component than several of us had given it credit for. So if some of this food disinflation is structural and sustains, and we have another year where growth is not accelerating sharply, and therefore core inflation remains contained, we could be in a situation here where in our own forecasts, CPI in the first 6 months of the year averages less than 3%, and in the next 6 months averages less than 4%. So I think that's going to be the challenge for the MPC, that we could be in a situation where inflation could meaningfully undershoot the forecast they had earlier in the year.
Okay. Let me come to the chairman then. Dr. Sen, it looks like these are two opposite points of view. Sonal saying that the GDP and the inflation fall could be transitory because of demonetization, and Sajid saying that no, it began earlier and is perhaps structural, the disinflation and the slowdown. Your thoughts, sir?
Well, in a sense, both are right, because what we did know for a while was that rural India was suffering and has been suffering for about 2 years. So the structural component in terms of the longer term deceleration of the economy was probably largely driven by that factor. However, when we come to the last 2 quarters, we have two contradictory forces operating. One is we had an excellent monsoon, very good agricultural response, which takes care partly of the rural distress that was being experienced earlier. And on the other hand, you have the effect of demonetization. So when you look ahead, I think the question that one needs to ask is whether the drivers of demand are back in place. Now, that's dependent on two things. One, of course, is what's going to happen to monsoons. If it's good, then hopefully rural demand will continue to pick up. The second is that the big intervention that the government has made in terms of trying to revive activity, revive demand in the economy, is really to push the Mudra loan much further. And so to create a lot of self-employment in the country and hopefully get demand back up. So we are in a situation where I think there are two question marks, and the way you think about the two of them would have to be different.
All right. I will come to you to how to think about these in a minute, sir. Samiran, some ground has been covered. Where would you stand in terms of what more factors the MPC may watch?
So if you look at it, Sonal and Sajid were talking more on the core inflation side of things and how it has kind of slowly coming down based on the output gap probably not closing as much as RBI was anticipating. But I think it's equally important to look at the food inflation part of it. And if you look at just the DCA data on food prices, for 10 consecutive months now, there is a month-on-month decline.
Okay.
I can't imagine this happening ever before. If you just look at absolute level of prices for vegetables, they are at the level where they were 3 years back.
Okay.
So something has changed, and we cannot just forecast food inflation based on past trends. So either we take the view that it's going to mean revert, or we take a completely different view that this is structural in nature. The other thing that is going to be important is that between June and August, the next policy, there are quite a few one-off factors that are going to drive inflation. You're going to see the monsoon, you are going to see the MSP increase, you are going to see GST introduction, you are going to see probably the HRA increase coming in. So the question would be that should we wait for some of these things to play out before taking a firm call on the inflation trajectory, or we get bold and change the inflation trajectory based on whatever we have seen in the last couple of months? I think that's the
one-offs will be the debate that
the MPC will have to do.
Okay. Well, let me start with the one-offs then. The current governor, then deputy governor, had, if I remember right, indicated that we have to maybe look through at least the 7th Pay Commission impact. GST, perhaps you cannot look through. It may be a little longer. What is your sense, besides the current growth inflation dynamics, Soumya, will these one-offs be treacherous enough to push up inflation, remove the structural slowdown?
See, I think in terms of the inflation dynamics, if I just let me concentrate on the one-off factors. I mean, if you look into the last MPC committee meetings, they have flagged 4 or 5 risks. One of us was the oil, the other was the GST, other was the food inflation, other was the imported inflation, and other was this pay commission recommendation. Now, if I just pick up the pay commission recommendations, I think they have not yet been implemented. And if my if I am correct, I think that is still being in the discussion stage, and the government is mindful that these changes could impact the headline inflation numbers. So as long as something is not done, I think we should not bother too much about it. So, and my sense is that now the impact, even if it is there, it could be spread over a period of months. Earlier we were talking about a 100 basis point impact. Now the impact could be limited and it could be spread over 6 months. So this is first one-off factor. The second one,
GST impact?
GST, in fact, we looked into the rates and all rates, and in our case we find that the GST could actually have a neutral to downside impact on the CPI headline numbers, because if you look at some of the commodities like pulses, which is actually driving the inflation rate down significantly in terms of a negative weighted contribution, there is the rate is actually 0. So I think some of these could actually even push the inflation rate meaningfully lower in the next couple of months. Then there is the impact of oil. Oil prices are now, there is a general consensus that they will be capped at say $50 or $50 or more. Food inflation, as Shomina was saying, if you actually look into the sequential non-adjusted month-on-month increase of cereals, pulses, protein, I think they are significantly less than what they were 2 to 3 years back. So in all my sense, and also the imported inflation because of the rupee. So in all my sense, I think even those factors which could be transient in nature could have a favorable impact on impact on the inflation trajectory going forward.
Okay, that's a strong set of arguments that things are headed lower. Dr. Sen is pointing out to Mudra and the removal of rural distress, and Sonal, of course, is on the other side saying that demon impact is probably transitory. But now, gentlemen, you'll have to tell me, and lady, how this will impact RBI's decision making. We have to take a break and be back in a jiffy to hear out what the RBI might do from our committee.